Welcome to the Flex Forward podcast, where grit meets growth. With your host, Nic Espanet, bringing you stories of resilience, reinvention, and the real climb to success.
All right, everyone, welcome to the Flex Forward podcast. Today we're joined by Shane Thomas. Shane and I probably go back 7, 8, 9 years that we've known each other through the real estate world, just investing, kind of seeing each other grow along. So it's been fun to see him and his partner, Prashant at Catalyst Equity Partners, and what they've been able to achieve. And I'll let him give a little more detail on that, but it's been great kind of growing along beside them and at my own company. But Shane, welcome to the Flex Forward podcast. Can you give a little more information to our listeners about what you have going on and kind of what you guys are doing?
Yeah, Nick, thanks for having me on. I'm excited to be here. And like you said, I've known you a long time and have enjoyed our relationship. So like Nick said, Prashant and I, we started Catalyst in 2017. We're Texas based. I'm here in Houston, Prashant's in Dallas. We've done 2,000 units as lead GPs. Started off in the kind of Class C workforce housing space when cap rates were a lot higher and returns, the risk adjusted returns made a lot of sense. So we cut our teeth in Class C. We've done probably over 1,000 units Class C. And then post 2020, as cap rates compressed, we started moving up the food chain. So we bought a few Class B assets. And then we, as cap rates continue to compress, we tried to sell some of our Class C stuff. We did so successfully on a number of deals. And then we continued to move up and bought some Class A stuff. So we've got anything from 1960s kind of flat roof to 2015 garden style product, kind of all averaging around 200 units. We do 100% multifamily. We are not dabbling in any other asset class. We have a in-house construction company, so we're very, very close to the ongoing value add execution, control those costs well, and then we have in-house functions like asset management, marketing, acquisitions. But we're a fully multifamily focused company, and so I'll stop there.
Good stuff. Yeah, thanks for sharing. So not quite as much now, but through that process, there was a lot of competition, and a lot of people have dropped out. What is something that set you guys apart through the over the years that have helped you have success?
Yeah, no, that's a good question, Nick. I think I always tell our investors, and I've always told them that we plan to be doing this for decades, right? So even when we started, right, we've always had the long-term mindset, right? This wasn't a quick get in, get out for us. And so I think that's what served us well. We continue to communicate well. We've got investors that have invested with us for the last 8 to 9 years, and they've invested in others, and they continue to invest with us because if somebody emails us or calls us, they're going to get an answer, right? And we, like others, have had challenges, right? Not every deal has gone perfect, and obviously the last couple of years have been very challenging. But we continue to kind of stand up to those challenges and find solutions. And I think investors respect that. We don't keep anybody in the dark. So I think that's one thing that sets us apart. And we come from, kind of consulting backgrounds, and, we're a very process driven company. So we try to, incorporate technology and make sure we have the right team in place. And we're just consistent. And I think that's what shows well. And we haven't, veered off course. Obviously, we've pivoted with different strategies within multifamily, different financing structures, different solutions. But, when, things got tough, we didn't say, hey, we didn't throw in the towel. We're fighting through this, and we see great opportunity ahead.
For sure. And one thing that you touched on was communication. I think that's important with your investors, because if you do enough deals, something's going to happen on one of them. It's just inevitable. It may be 10 or it may be 100 you do, but you're going to have a challenge on something. But being upfront, transparent with your investors is so important in getting back to them. That's something we strive to do also. Is there something through that process that you guys just naturally found came easy to you, or maybe just yourself came easy that others may have found challenging?
I think, this is there's a lot of moving pieces in this business, right? And so I think, we've tried to form a team that can kind of tackle all the different areas, right? Like I'm not an expert in construction or swinging a hammer, but we've got the right team members in place. I think where, I excel is kind of finding opportunities and being able to figure out, what the business plan requires to kind of create that value creation. And a lot of the financing and kind of capital structure and whatnot, leading those efforts. And then, we know kind of at least try to see the trends, right? Like when rents started flattening out and dropping, we kind of had to make tough decisions to say, hey, you know what, let's not renovate this unit. Let's kind of pause on our renovation plan, hold back capital, right? And I think, the other thing is, we've always viewed these as, operating businesses. And, with our financial background, we've always looked at, it's not just about NOI, right? A lot of people focus on NOI, and I always tell folks that NOI matters when you buy, sell, and refinance a property. At the end of the day, it comes down to net cash flow. And I think, we've been able to manage cash, in good times and in bad, that has helped us create runway. Whereas a lot of deals that were purchased, a few years ago, they burned through cash, just kind of, mismanaging it. And, at the end of the day, cash and liquidity is king, especially in tough times.
For sure. That, so many people get hung up on the NOI, but there's a whole lot more that goes on below that is important. What's actually hitting the bank is right down there at the very bottom is so important. And is there some, okay, sorry, let me start. If someone listening to us wants to get better at doing something, maybe managing a property or personally, do you have anything that you use to help with self-improvement or learning to be a better manager of your company and your properties?
Yeah, no, I mean, that, is a ever evolving kind of opportunity. I've kind of dug deep into kind of personal development. And, I think, when we first started off, we tried to be the jack of all trades, and you kind of have to when you're starting a company, sure, right? You're kind of wearing every single hat, right? And I think, at the end of the day, kind of hiring our first employee, then our second, looking back, I wish I made those decisions earlier, right? And the key is, having the right people in the right seats, right? So if somebody's not a fit, and it just doesn't mesh with the team culture, that could spread, and so we tried. And fortunately, from our team standpoint, we've had very strong tenure. Nice. And I think that goes kind of to the culture that we build. We're a small team, but we're nimble, and everyone plays a role. And Prashant and I try to ensure we set expectations up front, because I think a lot of problems in business and in life is just lack of expectation setting and lack of communication. And so those two things are paramount to us. And then, having the ability to be resourceful, to kind of get through challenges, right? Because at the end of the day, we're paid to solve problems,
Oh, good stuff. I mean, very good. So what's one of the biggest challenges you've had to overcome in your career?
There's been a few, to say the least. I mean, I think from a multifamily perspective, the last 2-3 years have definitely been the most challenging time, right? I think just industry wide, obviously, interest rates rose. We did a number of deals that were value add that I think we did the right executions because, they were bridge loans, floating rate. But if I look at, 4 out of the 5 deals, we've raised the NOI, on the low side, 30 to 40% on those deals, right? There's probably one deal that we did that was more of a stabilized deal that probably looking back shouldn't have been a value add deal. But, so those anyway, I mean, look, interest rates going from 4 to 8, obviously impacts everybody. There's only so much you can do on the expense side, even on the revenue side, to combat that. And I think, that required us to be very, very resourceful. And like I mentioned to you earlier, 4 out of those 5 deals, we've been able to successfully refinance, into fixed rate debt. But that did not come without significant planning and strategizing, right? Some of these solutions took upwards of 15 to 18 months from the start, to kind of enact, and, we recently just got a HUD loan, application that we started the process over a year ago, and now we're in a position that we can refinance the remaining fifth deal because we thought proactively a year ago, and so, I think those are the challenges, and then communicating to investors and having them understand that, this is where we are in the cycle, right? We all use the best data available to us in 21 and 22. We tried to hedge our bets, and at this time, real estate, like I said in the beginning, we were in it for the long run. So we just got to find a way to create runway on these existing deals. And that's what, we've been kind of working through. And now we see kind of an opportunity to kind of start a new cycle. So I'm excited about that.
Good stuff. I mean, I think hit the nail on the head with, we're going through, cycles happen and we're back at the bottom, most likely, or close to it, somewhere around there. And there's definitely going to be some opportunities in the coming time. So Shane, as our listeners start having more success in their whatever business they're in, they start thinking about passive income. And I know, as being a syndicator, I know your thoughts on this, but I'd love to let you share it with our listeners. But what are your thoughts on people getting involved and having alternative investments or passive income in their portfolio?
Yeah, no, look, I think it's there's a spot for alternatives in everybody's, kind of investment portfolio, right? Obviously, it's a diversification play. There could be tax benefits depending on your tax situation. So yeah, I think there's definitely a spot for that allocation. I think the key is, understanding kind of the rewards as well as the risks, and so, generally, Nick, as you know, I mean, we're going out to folks that meet certain SEC requirements, whether accredited or not. And I think, the investors just need to understand that these are generally longer term plays, right? 3, 4, 5 years, right? At least that's how we model. And, they're generally illiquid, right? And so those are the couple things that, when you compare it to the stock market, those are the big contrasts between them. But once you get comfortable with that, and then I think the next thing to do is really kind of understand who your sponsors are, and so at the end of the day, vetting those sponsors, looking at their track record, and seeing, how much skin they have in the game. I think that's very, very important because, Nick, as we know, I mean, there's deals that, good deals that bad sponsors kind of can run to the ground. And then there's, great sponsors that can turn around bad deals, and so I think, vetting those sponsors, the jockey, and I think right now getting in as a new passive investor, there hasn't been a better time since probably 2015, to be quite honest, 2015, 2014. And, the reality is that I know, a lot of folks that were like, oh, I can't wait till I get my post 2008 experience again, or opportunity again to get in at the bottom. And look, the reality is when you're in it, it's the hardest time, right? Because right now it's, like you said, I mean, who are we to call the bottom? But, pricing is off, 30 to 40%. Rents haven't dropped 30 to 40%.
Right.
And there's a lot of tailwinds coming up, that, from a macro perspective, you'd have to think things are only going to get better, not worse, and so, but when you're in it and you've got struggling deals and things like that, it's kind of hard. But I kind of liken it to the stock market dollar cost averaging, right? It's like, hey, you know what? You got to just continue to invest in, for the long run.
Yeah, well said. And I saw a presentation that said when it's easy to raise money, like 21 and 22, that's when it's going to be painful for your investors. When it's hard to raise money, now probably in 08, for the early part of the teens, is when you're going to have success for your investors. So it's definitely more challenging raising capital now, but I think that's another indication that it's a better time to do it. So, Shane, as we're wrapping up the interview, do you have any exciting plans or initiatives in the next 6-12 months?
Yeah, no, I mean, I think we look at this as an opportunity to double down. So we're seeing a lot of good deals. Recently we've underwrote deals that we haven't seen this type of underwriting since 2018. Quite honestly, the return metrics with low downside risk. So we're excited. We're continuing to solve a couple more challenges, and I think we'll get there in the next quarter or two. And then we're looking forward to buying good quality deals. And I think the next 3 to 5 years, folks that are kind of getting in on this vintage around this time frame are going to thank themselves in 3 to 4 or 5 years from now. So I'm looking forward to taking everything that we've done and all the lessons we've learned the last 9 years and capitalizing on that.
Oh, good stuff. Yeah, same here. So Shane, thanks so much for joining us and sharing some great tips and insights with our listeners. If people want to get in touch with you, what's the best way for them to make contact with you?
Yeah, sure. They can reach out on our website, which is CAT Equity, CAT equity.com, or feel free to send me an email. It's Shane, SHANE at catequity.com. Would love to chat with any of your listeners.
Awesome. Thank you so much. And everyone, thanks for listening to the Flex Forward podcast. Be sure to like it and share it with friends and keep tuning in. Thank you and have a great day.
Thanks for listening to the Flex Forward podcast. If you've got grit, growth, and a great story, visit flexforwardpodcast.com/guest to apply and join us on the show.